What's up everyone and welcome back to the channel. So I have a question out there for you viewers. Comment down below with your response. Do you think that this stock market rally that we're witnessing right now is real, or do you think it is a bear market rally and it is a fake rally, a fugazi rally? Because on this video we're going to go over a bunch of stuff that is in regards to this most recent stock market rally. So let's just dive right into it. Definitely consider hitting that subscribe button if you like financial content. And you can also join the Patreon, link down below, only $5 a month to support the channel. You'll get live trade alerts. It's a Discord server with hundreds of investors where we go over trading opportunities. So right now when we take a look at the fear greed index, it is currently indicating that this market is showing greed, which is way different than what it was doing a couple months ago when fear was at a pretty high level. The S&P 500 just for this year is up 7%, which is a nice return considering the year we had in 2022. But even though the S&P 500 as an index is up near 7%, the average stock is just up 1%. So what gives? Why is the index outperforming most of the stocks out there? And this is definitely not a good sign, because when you have just a couple of stocks driving the market, it's not sustainable and it's not a strong sign for a strong overall market. It shows a shaky and uncertain market. Now, in preparation of this video, I did some research and I am going to be reading from a couple articles that I found to be very interesting and pertain to this most recent stock market rally. The theme that this rally is driven by just a couple of stocks. So let's get right into it. So this rise that we are seeing today in the overall market is thanks to a handful of mega cap companies at the very top. The top 20 largest company in the S&P 500 have added nearly $2 trillion in market cap this year alone, versus $170 billion for the remaining 480 stocks in the S&P 500. So let that sink in. 20 stocks added $2 trillion, 480 stocks added $170 billion. So you can see how the movers are very concentrated to those top stocks, those mega cap stocks that have the highest weight on the overall index. Now that's the top 20 stocks. When we look at just 10 stocks, the top 10 stocks, they account for half of the market's gains this year. So just 10 stocks out of 500 stocks are accounting for 50% of the gains in the S&P 500. Now, Apple stock alone is responsible for adding $242 billion in market value this year. That means that one stock accounted for 9.6% of the value created during this rally. Shares of Tesla, which are up 47% year to date, have added $184 billion, which is 7.3% of the S&P 500's value gain for this year. Now, the article is basically, in summary, stated that the 2023 rally remains anchored by the biggest stocks at the top of the market, a phenomenon that can't last forever. Things are moving in the right direction, but investors will need to continue to see broader participation to gain greater confidence in this rally. Now, when I look at these mega cap stocks and I look at the overall market and I look at the charts and the narrative that is driving this rally, there are a couple of reasons why I believe they are moving. But when we look at the technicals for a stock like Nvidia or Microsoft, we can clearly see that they are approaching resistance and they might be overextended. My personal opinion is yes, they are overextended and they are due for a pullback. Momentum can drive the share price higher for a little bit longer, but I think eventually this rally is going to end and we are going to see a pullback. These stocks are moving for two reasons in my personal opinion. The market believes the Fed is going to pivot and we are at peak interest rate, and that is typically good for technology stocks. And another reason is because of AI. Microsoft and Nvidia, without a doubt, are huge beneficiaries to the most recent craze in artificial intelligence. Microsoft with ChatGPT and Nvidia supporting or creating the chips that support AI. Now, on the flip side, AI is driving them higher, and this might be a bubble, and we'll get into that as well. but they also have exposure, I would say a lot of exposure to the PC market. And it was reported today, according to IDC, that Mac sales dropped 40.5% from this year ago period to 4.1 million units. Overall PC sales declined 29% year over year. So there's definitely not a bullish PC market. So how can Microsoft, Apple, and Nvidia be soaring to these high levels when the PC market is deteriorating? It's because of that craze that's causing a bubble in AI-centric stocks. And we need to be careful and mindful of this because this presents risk to the overall market. Because a lot of this rally is driven by these mega cap tech stocks, if they are to fall, which they can easily because of how much they have gained, then the market is not strong enough beneath those stocks to support the overall market. And that's when you'll see the market start to flush down. Now, pulled from an article, it states that Nvidia is trading at valuations on par with some of the biggest bubbles in US history, with a price to sales ratio of 25 times and price to free cash flow ratio of 175 times. Such extreme valuation ratios are rare for large established companies, as growth is a declining function of market size, suggesting equity losses are likely even if earnings grow rapidly. Companies that are well established and have been around a long time and have been publicly traded for a long time typically do not get those high valuations. Those high valuations are typically for companies that are newer with much higher growth. As a company gets larger and larger, they just cannot sustain the same growth rate because of the law of large numbers. Apple, it being such a big corporation, is not going to see 20-25% growth in revenues. They're going to see 5 to 6% growth, single digit growth, because they have already saturated the market. How much more people are going to actually be buying iPhones and purchasing Apple products? And this is very reminiscent of the 2000 .com bubble and the SPAC bubble that we saw in 2020 and all of those stocks that were completely soaring during COVID. When bubbles burst, they burst fast and they fall hard. And the one company people like to compare a lot of bubbles to is Cisco, because of the valuations and the share price that it got to during the .com bubble. In this article, it states the performance of Cisco shares following the .com bubble provide a cautionary tale for investors buying Nvidia today. Cisco traded at a price to free cash ratio of 200 at its peak, which is very similar to Nvidia's current ratio of 175. And over the following 9 years, free cash flows per share rose an annualized pace of 18%, as the growth story that many anticipated came to fruition amid the internet revolution. Over this period, however, the stock fell by 83% to its 2009 lows, as its price to free cash ratio fell to just 7.5 times. Even though the stock has recovered strongly since 2009, it still lost 72% versus US Treasuries since its 2000 peak, as shown in this graph. Long story short, buying stocks in bubbles is extremely dangerous, and even though the story might be true, like it was for Cisco and the internet being this huge thing, it doesn't always correspond to higher stock prices. So yet again, is this stock market rally actually real, or is it just driven by a couple of stocks that are extremely overvalued and could pull back? Now, I personally do not know the answer to that question, if this rally is going to be sustained or if we're going to see a pullback. I don't know how the market is going to move, but I like to associate some levels of risk with either direction. And in my personal opinion, I think the risk is to the downside in this scenario, and I can easily see how the market is getting frothy, is approaching levels of resistance, and has serious reasons or legit reasons that it could come falling down. But you let me know what you think in the comment section down below. Now, thank you guys so much for your time. That wraps it up for this video. I hope I was able to provide some value and teach you something. If I was and you'd like to support this channel, then definitely click that little subscribe button down on the bottom right here and help this channel grow. And Smash that like button to help with the YouTube algorithm, and definitely comment down below to get some interaction and engagement. It helps with the YouTube algorithm as well. And if you want to join our community, you can do so. There's a Patreon link down below in the video description, just $5 a month, and it gives you access to a Discord server of like-minded individuals where we go over trade opportunities and investing opportunities, and we talk the market every single day. It's only $5 a month, super cheap, cheaper than a cup of coffee, and just one good trade will make it well worth it. Now, like always, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya!